Most traders think stocks, crypto, and forex are completely different markets. They spend years learning separate, complicated rules for each. But what if I told you they all move based on the exact same hidden pattern? It's a footprint the big banks can't hide, and I'm about to show you how to find it on any chart in the world.
All right, look at this. We're starting with Google. Well, a crypto version of it. See this red box up here? This is a supply zone. It's not a random level. It's a specific area where big institutions sold heavily in the past, leaving a trail of unfilled orders. Retail traders see price going up and they buy. But smart money waits for price to return to these zones. Price comes back up, taps into that supply, and look at that rejection. A perfect area to look for a sell. Now, look at the opposite down here. This green box is a demand zone. It's where the big players bought up everything before, creating a powerful price floor. Price drops into it, and we get a sharp rally. It's the same logic, just flipped. But how do you know when the trend might be changing? This is the key. You look for a change of character or a chutch. See this pattern here? The market was making lower lows and lower highs, a clear downtrend. But then, bam, it breaks past the last significant high. That break tells us the sellers have lost control. The momentum has shifted and buyers are now stepping in. This is our first clue that the bigger move up from that demand zone is starting. Okay, that was Google. A cool tech stock. But does this work on the king of crypto, Bitcoin? Let's see. We switch to the Bitcoin chart. And what do you see? The exact same story. A huge push up into a major supply zone, followed by a massive rejection. And down here, price taps into a demand zone and finds clear support. The names change, the asset changes, but the pattern is identical. This is mind-blowing, right? But let's take it a step further. What about the biggest, most liquid market in the world? Forex. Here's the euro versus the US dollar. And again, does this look familiar? Price respects the supply and demand zones perfectly. The underlying principle doesn't care if it's a cryptocurrency or a fiat currency. It's all about institutional order flow. All right, this is the final test for most people. Pure, old-school stocks. We're now looking at Apple on the daily chart. Look at this massive run-up throughout the year. Where does it finally stop and reverse? Right into this major supply zone that was formed months ago. It's not magic, it's not a coincidence. Big institutions had sell orders waiting there. The pattern holds up again. One concept, 4 different asset classes. Just to really drive this home, let's look at gold. And we're not looking at a 5-minute chart. This is the monthly chart. Each candle is an entire month of trading, going back decades. Even on this massive multi-decade time frame, the logic is exactly the same. A major demand zone was established way back here. And now, years later, where is price reacting? At a huge monthly supply zone way up here. The principle is universal and fractal. It works on any asset, on any time frame. So why does this work everywhere? Because every market is driven by the same 2 things: human psychology and large institutional orders, greed and fear, supply and demand. Instead of learning a dozen complex indicators, focus on learning to read the one thing that truly matters: the footprints of smart money. If this just blew your mind and you want to simplify your trading, hit that like button and subscribe for more. Let me know in the comments which market you trade. I bet this pattern is on your chart right now.